friends, today we discuss illustration of hire purchase accounting. So I read the illustration. Let's see here. On 1st January 2015, a machinery was purchased by Ashok on hire purchase system. The cash price of the machinery was 5,50,000. The payment was to be made as follows. Rupees 50,000 is to be paid at the time of delivery and the balance in 4 equal annual installment plus interest at 10% on the balance of cash price. Ashok's books were closed on 31st December each year and he charged 15% depreciation on the original cost of the machine. You are required to prepare, show the machinery account, hire seller's account, interest account and depreciation account. The analysis of the question is the cash price of the machinery was rupees 5,50,000. Rupees 50,000 is to be paid at the time of delivery. Is nothing but down payment, means 50,000 as a down payment paid on the when the delivery of the machinery. So here is a Ashok is a hire purchaser. So the remaining balance will be paid in 4 equal annual installment plus 10% of interest. So the Ashok books were closed on 31st December each year and he charged 15% depreciation on the original cost of the machine. Original cost of the machine is nothing but 5,50,000. So you need to prepare machinery account, hire seller's account, interest account and depreciation account. Before going to solve the problem, we need to make some working notes. So for that I made it. For that, first you need to draw the installment interest. How much installment interest were to be paid by the hire purchaser to the hire vendor. So let's see the cash price. First, the particulars: unpaid cash price balance, rate of interest, installment interest. Clear? So first you need to take the cash price of the machinery. Let's see. Cash price of the machinery. How much cash price of the machinery is there? Here is a 5,50,000. 5,50,000. After that, you need to deduct the 50,000 as a down payment. You need to deduct 50,000 as a down payment less down payment. How much? 50,000. So 5 lakh. Remaining balance is 5 lakh. 5 lakh is called unpaid cash price at the beginning. Unpaid cash price at the beginning of the first installment. At the beginning of first installment. After that, installment plus 10% of interest. 10% of interest will calculate it on the remaining balance of unpaid cash price. Remaining balance of unpaid cash price means rupees 5 lakh. 5 lakh on 5 lakh put 10% interest. We got rupees 50,000 is a first year interest which is payable by the hire purchaser to the hire vendor. Clear? After that, less first installment. So I asked, sir, here is not given the installment amount, just give a hint. So balance in, after that paying 50,000 is to be paid as the time of delivery, nothing but down payment, and the balance means 5,50,000 less 50,000, 5 lakh remains balance, right? So 5 lakh balance in 4 equal annual installments. Let's see. Here is a 5 lakh divided by 4 equal annual installment comes to rupees 1,25,000. Each installment consisting of 1,25,000 rupees. Clear? So less first installment cash price on 31st December 2015. On 31st December 2015, 1,25,000. 1,25,000. When we deduct 5 lakh rupees, when we deduct 1,25,000 from 5 lakh, we got 3,75,000. 3,75,000. Still balance is remaining. It is called unpaid cash price. Unpaid cash price balance at the beginning of second installment. How much? 3,75,000. So on that 3,75,000, again we have to put 10% of rate of interest. 10% rate of interest which is given in the question. Clear? So 10% on 3,75,000 leads to 37,500. Clear? So after that, again less second installment. How much second installment? So I already said 5 lakhs divided by 4 annual equal installments leads to 1,25,000. Every installment consisting of 1,25,000. 1,25,000. So next, when we deduct 1,25,000 from 3,75,000, we got 2,50,000. Unpaid cash price balance at the beginning of third installment. On the remaining balance of 2,50,000, you need to put 10% interest. So 25,000. After that, less third installment. How much? 1,25,000. Each installment consisting of equal annual value of rupees 1,25,000. After that, deducting 1,25,000 from 2,50,000, we got balance of rupees 1,25,000. It is called unpaid cash price balance at the beginning of fourth installment. So on that rupees, you have to put again 10% of interest. 10% of interest leads to 12,500. 1,25,000 into 10%. 10 divided by 100, we got 12,500. After that, last one, less fourth installment. How much? 1,25,000. So the cash price of the machinery comes to 0 after paying all over installments. Then the total interest payable is 50,000 plus 37,500 plus 25,000 plus 12,500 leads to 1,25,000. On 5,50,000 machinery, after paying down payment, the total interest amounts leads to 1,25,000. Clear? After that, you need to prepare the installment amount and hire purchase price. After that, preparing the installment interest, you need to prepare the installment amount and hire purchase price. Let's see here. So you need to draw a table like that: installment amount and hire purchase price. Here installment number, amount in rupees, cash price, interest, total installment amount. So the first you pay is down payment. Down payment. How much? 50,000, right? So 50,000 down payment is to be paid during when the machinery is taking back. Clear? On that, so on down payment there is a no interest. Clear? There is a no interest. Total installment means total down payment is rupees 50,000. After that, first installment. So how much amount have to pay? The cash price of rupees 1,25,000 and the interest. So here is the interest, right? The first unpaid cash price at the beginning of the year. The first year installment interest rate is rupees, installment amount is rupees 50,000. So here 50,000. Total installment amount is 1,75,000. Clear? After that, second installment, cash price is rupees 1,25,000 plus interest. Second installment interest is 37,500. 37,500 leads to, so 1,25,000 plus 37,500, 1,62,500. 1,62,500. Next, third installment. So cash price is same, 1,25,000. So interest is 25,000. So leads to 1,50,000. Next, last fourth installment. 1,25,000 plus rate of interest is, amount of interest is 12,500. So 12,500 leads to 1,37,500. Total cash price 5,50,000. Total interest 1,25,000. Total installment amount including down payment 6,75,000. So here the cash price of the machinery is 5,50,000. So the total installment amount is 6,75,000. What the difference between the total installment amount and the cash price of the machinery? Nothing but interest. That is 1,25,000 is a interest charged by the hire vendor on hire purchase system. Clear? After that, after preparing the two statements, installment interest and installment amount and hire purchase price, then you need to prepare the machinery account. First, so machinery account is there. On 1/1/2015, the hire seller's account 5,50,000. Next, here 31st December 2015 by depreciation account. How much? In this question given, he charged 15% depreciation on the original cost of the machine. The original cost of the machine is 5,50,000. So here 5,50,000 into 15 divided by 100, we got rupees 82,500. So each year he charged depreciation of rupees 82,500. So if in case he has to provide depreciation on written down value, the each year depreciation is differ from 1 year to 1 year, but he asked that the depreciation is charged 15% on original cost of the machine. So 82,500 will same for every year. So each year 82,500 as a depreciation in the year 2015, in the year 2016, in the year 2017 and in the year 2018. Each year the depreciation is 82,500. Depreciation 82,500. After that we close the first year 5,50,000. When you deduct 5,82,000 from 5,50,000, we got 4,67,500. 4,67,500 by balance carry down. By balance carry down 5,50,000. Next, for the year 2016, to balance brought down, so 4,67,500. Again on 31st December 2016 by depreciation. Every year depreciation is 82,500 on straight line basis, means on original cost of the machine. So after close the accounts, 4,67,500, 4,67,500. So 31st/12/2016 by balance carry down, how much? 4,67,500 minus 82,500, 3,85,000. 3,85,000. Next, third year 1/1/2017 to balance brought down 3,85,000. On 31st December 2017 by depreciation account, how much? 82,500. Every year depreciation is 82,500. Let's close the year 3,85,000. 3,85,000 by balance carry down. So 3,85,000 minus 82,500 comes to 3,02,500. Next, last year 1/1/2018 to balance brought down 3,02,500. 31st December 2018 by depreciation account, how much? 82,500. Close the account 3,02,500. 3,02,500. So by balance carry down, by balance carry down, how much? 3,02,500 minus 82,500, 2,20,000. That's it. The machinery account is closed. Let's move forward to the hire seller account. Hire seller account. So in that also, date, particulars, amount in rupees, date, particulars, amount in rupees. Clear? First entry is on 1/1/2015, machinery is purchased by the hire purchaser. So by machinery, by machinery account, how much? 5,50,000. 5,50,000. Next, for that machinery, first On 1/1/2015 itself, the hire purchaser Ashok pays down payment, that is called to bank account within bracket down payment. How much? 50,000. To bank account 50,000. Next, how much interest paid by the hire purchaser in the year 2015 after closing the year 31st 12 2015 by interest account. So how much interest is paid? Rupees 50,000 first year interest. Here it is, rupees 50,000 first year interest. Clear? Rupees 50,000. And that first installment paid on 31st 12 2015 to bank account. To bank, how much? To bank account 1 lakh 1,75,000. 1,75,000. Closing the year 6 lakh. Here itself 6 lakh. 6 lakh minus 50,000 minus 1,75,000. He got 3,75,000. 3,75,000. To balance, carry down 3,75,000. Clear? 3,75,000 on 31st 12 2015. After the next year 1/1/2016, to balance brought down how much? 3,75,000. 3,75,000. The interest paid during the year 2016 31st 12 2016 by interest account, how much? Here is the interest, right? Second year interest 37,500 by interest account 37,500. The first installment in the second installment paid is on 31st 12 2016. The second installment is to bank account. How much? 1,62,500. Again the credit side total is more, 3,75,000 plus 37,500, 4,12,500. 4,12,500 on 31st 12 2016. To balance, carry down. So 4,12,500 minus 1,62,500, balance will be 2,50,000. Last year balance will be opening balance for current year 1/1/2017. To buy balance, sorry, here also buy balance brought down how much? 2,50,000. On 31st 12 2017 by interest account 25,000. By interest account 25,000. The third installment to bank account. Third installment how much? So 1,25,000 plus 25,000 of interest, 1,50,000. 2,75,000. 2,75,000 75,000. So on 31st 12/2017, to balance carry down 2,75,000 minus 1,50,000 leads to 1,25,000. Then last entry will be on 1/1/2018 to buy balance brought down how much? 1,25,000. 1,25,000. Clear? Then he paid to bank account on 1/1/2018 to bank account before by interest account. How much last year interest? 12,500. Clear? To bank account 1,25,000 plus 12,500 leads to 1,37,500. It is a last installment amount. Here it is, 1,37,500 installment amount. Clear? Next you need to prepare another 2 more accounts. Here it is, interest account, debit, credit, particulars, amount in rupees, particulars, amount in rupees. So whatever the interest paid in the first year, second year, third year, fourth year, these entries are made in the interest account. Clear? These entries are made in the interest account. So interest account paid to whom means interest is paid to whom? Hire seller, right? To hire seller account. How much paid in the first year? 50,000. This interest will be transferred to buy profit and loss account. First year close. Second year to hire seller account. How much interest paid in the second year? Here it is, 37,500 transferred to profit and loss account. Next, third year to hire seller account. How much? Third year interest is 25,000 by profit and loss account. 25,000. Then last year interest to hire seller's account. Last year 12,500 by profit and loss account. 12,500. interest amount and depreciation amount will be transferred to profit and loss account. Next, last you need to prepare, after preparing machinery account, hire seller account, interest account, and last one is depreciation account. Clear? Depreciation account. So depreciation account, every year depreciation is charged on original cost. So 5,50,000 is a original cost, that is, here it is, 5,50,000 is a original cost of the machinery into 15% leads to rupees 82,500. Every year charge depreciation as rupees 82,500 to machinery, right? So here for the first year, to machinery account 82,500 by profit and loss account 82,500. After closing the account, the depreciations will charge to the profit and loss account. Clear? So here also next year, to machinery account 82,500 by profit and loss account, transfer to profit and loss account 82,500, 82,500. Third year, to machinery account how much? 82,500 by profit and loss account 82,500. Next, last year, to machinery account 82,500 transfer to profit and loss account 82,500. That's it. Thank you friends. Here it is, the depreciation will show. Here is there, where is the machinery account? You see, depreciation 82,500, 82,500, like that. Every year the machinery account has a depreciation charge of rupees 82,500, 82,500. Thank you friends. Thank you for watching.